Yeah, welcome back. Before move further, we'll just getting into an intro on. I want to put your basics very strong. Okay, so I will use the word dealer to make you strong to try to understand your basics. Okay, this I will split up. You have studied golden rules of accounting, that is a traditional approach. Here you are going to study about a modern approach of accounting, which your basics will easily get understand them. Okay, here D denotes drawings, E denotes expenses, A is an asset. Asset is an inclusive of cash, inclusive of bank, inclusive of debtors, inclusive of stock, everything. L is an liability. E is an equity, or you can also call them as capital, or is revenue, or you can treat them as income. Okay, as far as modern approaching is concerned, if this 3 is increasing, you can easily debit it. If 3 is decreasing, you can credit it. As far as liability, equity, and revenue is concerned, if it is increasing, you can credit it. If it is decreasing, you can debit it. This is a simple basic rule apart from the traditional approach, that is golden rules of accounting, real, nominal, and personal accounts. Okay, so I'll just getting into some basics. So we will take an example of sales. Okay, sales can be do it in two ways. Correct. As we have already discussed, it can also be done on two ways. One is on credit, one is on cash. So suppose if I say if it is on cash, what is a cash sales journal entry? We are saying it is a sales. Sales is a revenue generating, that is an inflow to the business. Correct. If it is an inflow to the business, we will say sales. Sales is nothing but revenue generating activity. It has been increasing. I am getting some cash. Cash is nothing but an asset. Asset will also increase. So asset increase, I will debit. Income, that is on the activity of doing what I am major activity, sales I'm doing. Sales is increasing. So it is what? So it is what? It has been increased, so it is credit. So my journal entry will become cash account debit to sales account. Same in case of sales on credit. It is a credit activity. Okay, it is a credit activity. Okay, it is a liability. Liability is increasing. Okay, that is liabilities is increasing. Okay, just a minute. Yeah, sales on credit. Okay, there is a transaction between the sales is sold to the customer. Okay, so this customer needs to pay back the amount. So this customer will act as a, for the customer it is a credit. For me, from my seller point of view, it is a thing which I need to be received. Okay, which I need to be received, I will be treat them as an asset. Okay, this customer will act as a debtors. Okay, debtors value will increase. My sales as committed, because on the accrual basis, I am making a sales. Sales is a revenue generating activity, that is a trading income generating activity. So it has increased, I will credit. Debtors is increased, I will debit. So my journal entry will become debtors account debit to sales account. This is a basic few transaction which you need to remember regarding sale, cash, and credit. Under the cash, we don't have further transactions. Under the credit, when there is a risk of uncertainty, whether I may receive my cash, I may not receive my cash, instead of cash or instead of my credit sales, I may get some bills. There can be different perspective. Our first perspective on credit sales, we are bifurcating. Okay. This credit sales has been bifurcated into first. This credit sales, first thing, what if there is facing any damages? For any damages, we can do return inward. We can do what? Return inward, or popularly known as sales return. Why I am just putting some extra time for the basics is nothing but once this flow of purchase and sales will be comes to your mind, entire chapter or entire financial accounting, I can say, will become a cakewalk for you. Okay, so this, what is a journal entry? Written inward, the sales which I have done is coming back. Now my debtors value will comes down. If my debtors value comes down, my asset comes down. If my asset comes down, I will put it on my debit side. Sorry, I will put it on my credit side. Okay, debtors account. Next, my sales, my revenue generating activity is comes down. My income is reducing. If my income is reducing, okay, what I need to do? Or my revenues decreasing, I need to do a debit. I can put sales account also, but I want for a liability purpose, for an accountability purpose, I will create a new account called return inward account. Return inward account. Debit to debtors account is my first transaction. To debtors is my first transaction. And then there can also be a possibility that it can become a bad debt. The amount which I need to receive, there can be a possibility. Sales return also be done. Bad debts also be done. Any probabilities and permutation combination will be acceptable. Okay, any bad debt is done. Even at that time, my debtors is going to come down. My debtors is going to come down. My revenue generating income, which I never going to receive, which is a bad debt. Okay, so what I will do, bad debt, I will be treated them as a loss making activity. Okay, or I will treat them as income is decreasing, going to decrease. That I can treat them as an expenses, that is a non-cash expenses, that is a bad debt. Bad debt is treated as a non-cash expenses. Okay, so I need to write off the expenses, that is bad debts account debit to debtors account. My non-cash expenses will increase, correct? எனக்கு வரப்போற value, if the amount which I need to receive is, I understand that that is not going to be received further, so I will put it, I need to cancel that from my books. So what I will do, I will simply do it in my P&L debit side, so it is instead of that writing off of the my bad debts. Then third one, there can also be a possibility that the discount can be allowed, because I am making a sales. Whenever sales comes to picture, it is nothing but what? Discount allowed. Okay, this discount allowed is again an expenses for the seller. This expense is going to increase. I will write down as discount allowed, or you can also say not only in expenses, you can also say it is a loss for the businesses also. Discount allowed account debit to debtors account, because my debtors is going to decrease. This is the third thing. Fourth one, there may be a possibility that I may receive partly some cash, partly some credit. On that time, if my amount is received, if my amount is received, amount I am going to receive, that is cash I need to receive, or I need to receive my cash through bank, my cash and bank balances will come up. It will increase. If it is increase, as far as modern approach is concerned, I can do the debit. So amount received is cash or bank account debit. Now my debtors, they are repaid now. I have here what I have done, debtors I have debited. Now my debit balance is slowly steadily decreasing. So what I will do, to debtors account. Okay, to debtors account. Next, there may be a possibility that it can be mutually set off. What is mutual set off? It is an important point which will be helpful for every chapter. That's mutual debtors. Na? A is a person. Sells goods to B. B is a person. Purchases goods from A. Okay. A is making sales. B is making purchases. Here, from one point of view, he will be a creditor. He will be a debtor. From B's point of view, A will be a creditor. From A's point of view, B will be a debtor. If B sells, or we will put it further, if B sells the same thing to A, some other product, A will become a debtor, B will become a creditor. So, one or other way they will be mutually debtor and the creditor. So, when they will have a mutual set off, okay, we will reverse the entries. What is an actual debit entry? Debtors, what we have shown? We have shown it on the debit side. We will decreases the debtors amount. Creditors, at the time of making a credit, he can be on the liability side. Now we will cancel it off because we are mutually set off. We will do it on the debit side. So creditors account debit to debtors account is a mutual set off. For some cases, debtors may charge some interest. Interest may be charged. For that interest may be charged, my actual debtors amount will come up because on 10,000 they are charging 2% interest. On 10,000 they are charging 2% interest means they are simply asking extra 200 rupees. Correct? My 10,000 will becomes 10,200. To give this 200 rupees extra adjustment, okay, what I need to do? I need to debit with the debtors amount 200. Okay. 2, I need to credit the interest because the interest which I need to be received, it will be treated as an income. That will be a 200. Finally, I'll come to the last part. There can be a probability that I make a credit sales for 2 months. Instead of 2 months, what I will ask them, for a surety purpose, I need a bill. Whether it is in a check form or whether it is in a draft form, that doesn't matter. So what here comes to a picture is bills receivable received. Whenever sales is going to happen, you come across bills receivable. Okay. Whenever purchases happen, you will come across bills payable. Bills receivable received. So bills receivable received is committed to pay, is ready to pay, but it is after the 10 months or after the 2 months or after the 90 days or after the 60 days as per the agreement. So now in that case also my debtors will come down. Instead of that cash, I have taken a bills receivable. So my bills receivable will act as my asset now. Instead of cash form, it is in another form of money, that is a bills receivable form. So bills receivable account debit to debtors account is my value. So you have received the bill, but you have not get your payment. It is in a paper form. It is not in a cash. It is not in a money form. So now we have 4 options for bills receivable. With this bills receivable, we are having 4 options. Suppose first one is held till maturity. What is held till maturity? Held till maturity means till the maturity period of 30 days, 60 days, or 90 days, as the case may be, I will keep the bill with myself. Then I have already passed the entry for bill held till maturity. There will be no entry. No journal entry should be passed. No journal entry should be passed. Okay. But at maturity, the maturity time comes to a mind. Okay, this is your first thing. There can be a probability. Okay, at maturity it comes. In the bills, we have two concepts. One is honoring of the bill, one is dishonoring of the bill. What is an honoring of the bill? I am ready, I have cleared my payment. Dishonoring of the bill means I have not cleared my payment with some dues I am having. So here we are having honored, or it will be a dishonor. There will only be a two probabilities. If it is honored, I will pass the entry, I will get my cash, correct? My bank balance in my bank account, I will put my bill in my bank, they will give me the amount. That amount I will be in my bank account. So my bank account balance will become increase. That is, instead my asset balance will increase. So I will debit my bank account. Two, already I have created the bills receivable. Now this bills receivable has cancelled out because I have made the payment. My debtor has made the payment to me. So I will credit my bills receivable. Suppose when there is a dishonor, that's what comes to picture. Reversal of the original entry. Reversal of original entry. What is the reversal of original entry? Here, what is the original entry of us? Bills receivable to debtors. Here we will do debtors account debit to bills receivable account. This is for held till maturity, and after that at maturity date. Okay. Next part. It comes to a second criteria that in this topic itself I will cover bills of exchange also. Okay. This second part is something which needs to be give more attention. Okay, that is endorsed to creditors. That is, the third party will involve. A and B is making some transaction. A sends bills receivable. For B, it is bills payable. A is having another transaction with the C. Okay, he is liable to pay C. Instead of liable to pay the amount, he just endorses, he just transfers the bill to C. He transfers this bills receivable, which has received from B, to be endorsed to C. Okay, to be endorsed to C. So this endorsed to creditors, which has been done, this creditors already at the time of making, what is a simple journal entry for making credit purchase? It is nothing but purchases to creditors, correct? For that purpose, I have received my bills payable. At the time of bills payable, what is the journal entry I should pass? That is, my creditors balance I am going to write off, to bills payable I will write off. This is a journal entry I will write off. Now, for the point of view of A, okay, C is a creditor. Now I am going to cancel my creditors by showing this bill, by transferring this bill. My creditors balance will comes down, my liability will reduces. Okay, liability is reduces, I am going to debit. creditors account debit to bills receivable account, because I'm only transferring the bills receivable, correct? So bills receivable account. In this cases also, okay, this is the time which you need to do. At the time of maturity, at maturity, there may be a two option, as you know, one is honor, one is dishonor. So if it is honor, no journal entry. Okay, if it is a honor, no journal entry. Journal entry will be in the books of the C. It should not be in the books of A. Okay, for this in the books why we are not putting the entry for A na? It is not actually collected by A, it is actually collected by C. In C's books, we are having a honoring entry. For dishonored, suppose the payment is not done, C will comes to me. C will scold me. Your payment is not clear. Just make my payment. What A will do? A will go to B. Your payment is not clear. Just give it to me. So he will act as an intermediary person. So in those cases of a dishonor, I will pass a journal entry. My creditors. Okay, my creditors account debit. Yes, making some payment now. So my creditors account debit to bank account I will do. Because why I will write my bank account? Because I am paying something called noting charges. Okay, I am paying something called noting charges that I need to be paid. Next, third part is something discounting with bank. What is this discounting with the bank concept will work? A is a person, B, A is sending bills receivable, okay, to B, okay, B is accepted and signed it, then it will become bills payable. This bills payable will be sent to A. So for A, it is bills receivable. From a point of view, it is bills payable. Okay. So this bill is worth of 3 months. What A has done, A will go to the financial intermediaries like bank. To the bank, they will ask, I need a payment immediately. Or after a 1 month, he is going to the bank, I need my payment. What the bank will say is, you have a 3 months credit period, sir. It is having a probability of 2 more months. For those 2 more months, we will deduct some percentage as a discount. You are asking the money immediately, but it is having an actual due of after 2 months. Okay, actual due of after 2 months. But you are asking immediately. What I will do, I will deduct some amount as my discount and I will repay you the remaining balances. At that time, how the journal entry will works. I will get my money in my bank, correct? My bank account will increase. So I will debit my bank account. Bank account debit. Discounting charges as me treated as my expenses. Okay, discounting charges account debit, that I will debit. 2, I will do my bills receivable account because I am already disposed the bill and I get my payment, that I will credit it. This is what discounting will works. So at the time of maturity, how it will works. At maturity, again there will be 2 concepts, honor and dishonor. So honor and dishonor, how it will works. Honor is something which has already been cleared by that person. The bank will pass the entry. At the time, there will be a no entry for me. For dishonoring, there will be entry that debtors account debit to bank account. Debtors account debit to bank account is my journal entry. Okay, and there will be a loss probability. Practically, most of the time we don't use those one. Fourth option, this and all an option, any one should be done. In single bill, you cannot do discounting. In single bill, you could not do discounting endos, that's all not probable. Any one bill, any one option is possible. Next, send bill for collection. Okay, send bill for collection. This send bill for collection will create it as a separate account. That bill send for collection, I'm going to collect it in another time. So bill send for collection account debit to bills receivable account is my journal entry. At the time of maturity, at maturity, there will be two probables, as you know. One is honor, one is dishonor. So on honoring the bill, okay, I will pass an entry. I received my cash in my bank account. So my bank account balance will increase. The balance which I created BSE account will cancel it out. And if it is dishonor, again I have created reversal my entry, debtors account debit to BSE account. To BSE account. Okay, these are the 4 options which I have done. Okay, BR denotes bills receivable. First option which I am having is what? I have the bill till my maturity. Second, I will endorse. Third is discounting. 4 is what? Send for collection. This is regarding this will comes under the 5th part. That is the last 7th part, which is bills received. No, this 7th will having a 4 option. Okay, in any those 4 option I will. Okay, so here there may be a journal entry. There may be a journal entry for one thing, recovery of bad debt. I may think I may not receive the amount. After few months, they itself come back and they are ready to pay this amount. And what the amount they will do? First journal entry I will pass in my books. I will receive some money. Bank account debit to bad debt recovery is an income activity. Okay, so that is an bad debt recovery account or recovered account. At the year end, because it is a nominal item, at the year end, okay, at the year end, I will pass the journal entry, profit and loss account debit to bad debt recovery account. Bad debt recovery account. This is your first journal entry you should pass, and this is the second journal entry you should give an effect at the year end. Or you may also think that you may create a provision. Okay, you may create a provision. So creation of provision of debtors, provision on debtors, or you may also say, some may also say PDD account, provision for discount on debtors account, or provision for doubtful debts account, or they may also call RDD, reserve for doubtful debts. Reserve for doubtful debts. I am doubting that he may not pay the bill. So at that time, we will pass a journal entry. Profit and the loss account debit to provision for bad and doubtful debts account, or you may also say provision for discount on debtors account. Anything you can put it towards a profit and loss account. at the year end, because we will treat them as an expenses. Okay, we will treat them as an expenses. So this is how the entire sales will work. Entire sales will work. Without this, there is nothing. And we have one more option in the sales, that is on sale or return basis. Sale or return basis is another concept which not forms part of your curriculum. You will only having another methods of sales, that is called consignment. On the another method through a sales is a consignment, that forms part of your chapter. Okay, this is a flow of a transaction or a flow chart for a sales journal entries which you are having. Okay, next we are going to focus on our next video is going to be on the purchases. Okay,